The market structure. So, in simple words, it is how the market moves. So, market structure gives us bias for trending opportunities. So, price go up to find sellers and then go down to find buyers. So, sounds very simple. And this lesson is mostly to show the terms of accumulation and distribution. So when I'm going to explain some of my trades, you will know which market phase I mean. So the price usually goes through four phases. The accumulation, then we have the uptrend with reaccumulation levels, finally finding the distribution, downtrend with redistribution levels, and to find another accumulation. And I'm not going to explain what support and resistance is. Here we have resistance, here we have support, and how to spot it on the chart, because the price moves within the structure of support and resistance. So this is what all the retail courses are telling, that a breakout of a support, like here, or resistance, will lead the price movement in the next area of resistance or support. It's easy. So in my trading, I am more focused on market phases, and the beginning is about accumulation. So accumulation is for me when the institution removes the floating supply, so the bearish move of asset by buying. And it generally takes places within a well-defined consolidation with a lot of indecision candles. I hope you all know what is indecision candle. So then we have the accumulation. The first range could be inside the demand zone or right above the demand zone. And then comes reaccumulation, and it is nothing else than testing where the next potential supply is. So it's the reaccumulation, and it looks same like accumulation. This is still the range with a lot of indecision candles. They are looking if inside some supply there are resting sell orders, they're limit orders, so I call them passive orders. If not, they're going still higher to find another supply. So this is then another reaccumulation. Okay. And distribution is something opposite. So institution removes the floating demand of asset by selling it. So we have supply. In this case, you can see the consolidation happened inside the zone. On the previous screen, there was accumulation right above demand, but it can happen also inside the zone. So we have consolidation with a lot of indecision candles. They found sellers, and then above another demand we see redistribution. So redistribution can be potential accumulation. It all matters when the strongest aggressive buyers or sellers will join the market. That's why we see the range. This is the big fight, kind of auction between buyers and sellers to show who is stronger. And finally, price coming back to the demand, and we have another accumulation or potential redistribution. There's also something else in terms of market structure. The patterns, or not the patterns, this is the way I explain the wave. So when I'm explaining, or some older members also, that there was on the chart rally base drop. Yeah, it means it's the shortcut is RBD. So we had the rally, price created the base, so the zone, and then was a drop. And for short, it is drop base rally, so DBR. I'm not using these terms very often, but I've seen on our Discord that some members using this, and this is very correct, because yeah, it's helping me to know what someone else knows, what he meant. And something opposite for market changes is the trend continuous base, so rally base rally and drop base drop. It's very simple to show in this case that if someone is telling that I caught RBR, I know that he was a very patient trader who caught the first rally, wasn't afraid of the range, because that could be also rally base drop. Yeah, so someone was patient, maybe with good stop loss, and when I see that someone caught RBR, it means that it was rally, he waited whole the range and got another rally. These are very big trades. I am a scalper, I'm just getting the first rally or drop. I don't like ranges. I don't like when my trade, the current going on trade is in the range, because everything can happen in every second. There can be stronger buyer or stronger seller to reverse the price or to make a continuation. I don't like guessing, but some swing traders need to hold the trades, yes, to get better RRs. So if you will see something like this, these terms on the chat room, you will know what someone meant. And the last thing about the market, which in my opinion is good to know, the price and volume relationships. It is the table which gives me the truth. I'm focused on the second and the last one. Usually when price is rising and we see the increasing volume, it means that a lot of aggressive buyers are joining the market, so we have strong uptrend. But when price is going up and we see decreasing volume, there's the very high probability of reversal. So this is why when I see, for example, the price going to the supply, doing the small consolidation with decreasing volume, this is for me a sign that this could be the distribution. Yes, because there's no more interest from buyers to go further up. So the volume is decreasing. It's lower and lower and lower interest, and then I am just waiting for aggressive sellers. And opposite, when price is going down, but the volume is bigger and bigger and bigger, it means more sellers are still joining the market and they would like to take the best possible lower price. So this is obvious strong downtrend. And the last position, which I also like when I'm looking for a buy setups, when we see very bearish market, price reach some area, the potential demand zone, and the volume is decreasing, it's very high probability that finally we found accumulation phase. So price is accumulating for a new bias as long. So it's called downtrend weakening, and big probability of reversal. And some courses are love to see the very high volume inside the zone. But from my experience, when I see some range or price going too quickly, too aggressively to some zone, it's bigger probability of breaking it rather than that the zone will hold the price. Of course, when I see absorption, it's just very short-term situation, and then it means that very big, large orders got filled. But usually, when we are talking about distribution and accumulation, the decreasing volume is a very good sign that the trend will change. It was a short lesson. Just as I mentioned in the first slide, I want to show you the terms I use when explaining the trades. Thanks for watching, and let's go closer to the entries, and the next lesson will be about patterns I use and I love to see in the market, so the compression and liquidity graphs. Thank you.